Hi everyone and welcome to the new channel called Stock Talk with Micha Stocks. I'm Micha Stocks. Nice meeting you. In this video, we're going to summarize the top 10 highlights, top 10 news articles, top 10 amazing things that happened this week in the stock market. And then we're going to look ahead at the next few trading days that we have. Since it's Thanksgiving week, we don't even have a full week. Let's dive in. We'll start summarizing the major averages. You can see the Dow Jones, the S&P, the Nasdaq, and Russell all in the red. The Dow Jones hitting or getting hit the least amount, minus 0.18. And the Russell, the IWM, almost 1% on the downside. When we look at the crypto market with all the FTX drama and scandal, we can see Bitcoin on a 5-day scale. You can see that it actually stabilizes around 16,000, but still a lot of damage in the crypto market, and it might be one of the highlights, one of the news items on the top 10. And when we look at the heat map for this week, we see that there's a blend of stocks that went up and stocks that went down. There isn't one sector that performed better than the other. You can see a blend of all the sectors, which makes sense. It means that the market right now isn't focusing on one sector. It's more of the behavior of specific companies, more of a stock picker's market than a specific sector market. So let's dive in. Jim Cramer wants to say congrats on the new channel. I just met him a few hours ago. And of course, he was very excited to hear that a new channel is being launched. So congrats and thank you, Jim, for the kind words. Top 10 news articles that impacted the stock market this week. Let's dive in. Number 10. And on number 10, we have the big question. Are we close to a crash or are we getting further from that? This is from Real Investment Advice, RAI, which posted on their Twitter account where you can see the three phases of a bear market. Light blue is the crash of 2008. Orange is the crash of the bubble of 2000, and the black line is where we are today. The question is, are we getting close to the end of phase 2 and going into phase 3, which means another downside that would bring the S&P averages to around 3,100 to 3,300, or are we going up from here? It's a big question, and during the top 10, we might get a few clues to that. So let's continue. That's the top 10 news, the big question. Are we getting close to a peak, a short-term peak, and we're going down, or are we going to try to create new highs for a Santa rally maybe? If there won't be a Santa rally, it means we're going down. If there will be, it means we're going up. We'll follow this through in the next few weeks. Number 9 on our radar is Liz Ann Sanders with Charles Schwab that updates us that existing home sales continue to tank. Real estate in the US took us a very, very hard hit from the rate hikes that came from the Fed. And right now, you might say that the real estate is kind of in a blockage. Nothing is selling. No one's buying. Everything is stuck. Everything is waiting. Part of it is due to the rate hikes. Part of it is due to a recession. Yes, no. But the numbers tell the story. We are stuck in the real estate market. That's the number 9th event this week. Stock market or the real estate market is blocked. Number 8 on our charts is China. And on the China front, we see a bit of optimism on Alibaba. Stock is BABA. Executives there talk about business after China reopening. There is, let's call it a rumor, a feeling, a hunch that China might be easing off COVID restrictions. Part of it is because their economy is being hit very hard from all the COVID zero policies. And also you can see, and this is Sofia Herta Acosta and her Twitter account, you can follow. She posts 10 big stories for this week in China. And you can see there's fatigue between the Chinese. They cannot keep on going for over 2 years of lockdowns due to COVID zero. And when you look at the different Chinese stocks, you can see the performance between JD.com that went up 14.5% this week or in the last 5 days. Year to date, they're already almost minus 18%, which is better than the Nasdaq, which is minus 29%. But The worst performers this week were XPeng and NEO with minus 8.6% and minus 9.4%, which brings XPeng to minus 84% year to date, and NEO stock minus 66.95%. Both are in EV companies from China. Number seven, we have earnings. We're very close to the end of earnings season. This is a table from FS Insight. You can see that we are done with 93% of the companies in the S&P 500. 70% of them beat. We have 2.5% that surprised. But when you summarize, the earnings this season was weak due to ongoing consumer struggles. The consumer is feeling the pain, spending less. Companies are making less money. Earnings are falling. And if this is a preview to what's going to happen in 2023, if we'll go back to the 10th item that we said, are we going to phase 3? That might be a clue to where we're going ahead. And when we look at all the companies that reported this week, we see a blend, but mainly retail companies. And you can see kind of a split between the high-end retail companies, which continue to perform well. The companies that sell cheaper items like Walmart and others, not to offend Walmart, of course, performed well. But in the middle, the biggest company that got hit was Target, ticker TGT, got hit minus 15% on the day of the earnings. And part of their hit comes from, believe it or not, shoplifting and stealing and theft. They reported over $400 million of items that were stolen from the beginning of the year. Think about it, $400 million. Yeah, I assume people here that are listening to that say, oh, they're probably adding a lot of things. Even if they added and you multiplied by 2, and it's only 200 million, which I don't think that they lied in their report, but never mind. It's $200 million of theft. That's crazy, 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 crazy. So those are the companies that reported this week. We had a blend of reporting. Let's continue to number 6. What would be on our number 6? It's Taylor Swift. Why is Taylor Swift connected to the stock market? Well, the story is this. Taylor Swift did not go on tour for 5 years. She launched her new tour dates and, of course, opened through Ticketmaster the ability to buy tickets. Ticketmaster fell a few times. The website fell a few times. But how do we connect everything to the stock market? That's very easy. The owner of Ticketmaster is Live Nation Entertainment, ticker LYV. Due to the high demand, due to the lack of enough tickets, and everyone wants to buy a ticket, Live Nation right now faces a lot of heat, and Department of Justice opened an antitrust probe against Live Nation and Ticketmaster after Taylor Swift fan backlash. A lot of problems, although Taylor Swift really wanted to perform after 5 years, but apparently the website didn't hold it and the ticket prices were very, very high. Ticker LYV down 13% this week. Number 5, we're getting close to the heat. Number 5 is Twitter. Yes, I know Twitter is no longer on the stock exchange when they were the ticker with TWTR. But the ripple effects on what Elon Musk and his team is doing on Twitter is going to impact this way or the other the whole stock market. The reason for that is, as you probably have heard in the past, Twitter, from the moment Elon Musk bought Twitter Friday, 3 weeks ago, a week later, he fired 50% of the employees there. And there's a rumor that says that the rest, at least half of them, also left, which means that 75%, at least from the rumors, of Twitter employees are no longer there. There's a lot of bad blood between the employees that are there and are not there. And Elon Musk, they decided to protest in a very unique way. They rented an apartment across the street from Twitter in San Francisco and broadcasted all the hate that they have against Elon on the building of Twitter. And to that extent, even Mark Benioff, the CEO and founder of CRM, Salesforce, stood alongside Elon Musk and 23 hours ago just updated, don't underestimate Elon Musk. Will the Twitter experiment work? Does high-tech companies or tech companies have an opportunity now to cut the amount of employees? It's a very, very big question. The one thing that we know almost for sure is although Twitter stock is not in the stock market anymore, Tesla stock, ticker TSLA, is being hammered throughout the last 6 months because of everything that happened in Twitter. And why is that? Because Twitter is a losing company, loses around $4 million a day, and there's a lot of fear that Elon Musk, in order to support the company and not going bankrupt, which he said the company might do, will need to sell more stocks. And that's why in the last 5 days, Tesla keeps going down and is down another 6.5% and is now at one of the lowest PE or forward PE point that it is, around 30 forward PE for the next 23 for the next 12 months, which makes it, for the growth that it has, a very cheap stock. Yeah, and remember, nothing here is financial advice. Of course, everything you need to check for yourself. I'm not a financial advisor, as you can see in the description below in the disclaimer. Let's continue. Number 4. Number 4 is not a happy topic, but it's a topic that we have to address here on the channel, which is layoffs. Yes, layoffs have become something very dramatic. And thank you to Visual Capitalist on Twitter, which posted this visualization way of the companies and the amount of layoffs that occurred. I don't know why here it is. So we see thousands of employees being laid off, different companies, different sectors. We see the increase of layoffs across the board. And when you look at the different layoffs, you can go to layoffs.fyi and you can see the growth of layoffs during the month of November, and I'm recording this November 19th. 42,356 employees were laid off during November itself, which means 122 companies laid off employees. You can see the amount of employees growing rapidly, almost exponentially across the year. And yes, this has become one of the most spoken topics across Twitter, across the different board meetings, and of course, across the different companies preparing themselves for next year. And when we look at an open letter that TCI Fund Management, which owns a portion of Google stocks, sent Google CEO an email with this letter saying that Google full-time employees grew very rapid since 2017. You can see the annual growth, and you can see the annual growth of employees across Google, different divisions in Google. But the biggest questions, or the biggest, let's call it, criticism or question is around the salary. You can see here that the top 20 median is around $117,000 in US tech companies. You can see Microsoft at $176,000, and you can see Alphabet, the parent company of Google, $295,884, which brings the amount of employees multiplied by the average salary to a point where Google might not be competitive enough, or on the other hand, might mean that shareholders, just like us, are paying the price. Now, does Google need so many employees? Do they need to pay them that much? Remember what Elon Musk is doing in Twitter? That's why it's the most interesting experiment right now in the stock market, because if that works, if Elon Musk proves that you don't need so many engineers and coders in order to be a successful company, that might create a ripple effect a lot bigger than we think. So those are the layoffs. It is a very important item, and we're going to cover it anytime that there are news. Top 3. We are now at the top 3 things that move the market. And on number 3 is the Fed. Don't fight the Fed. That's the main, let's call it, title for this year. Don't fight the Fed. James Bullard this week stood in front of the camera and said that he doesn't even think that the Fed needs to stop the rate hikes at 5%, maybe even consider 5 to 7%. 5 to 7% means that the stock market will take another leg down. The reason for that, at least from my point of view, why do I think that? Because if you get 5 to 7% without doing anything, why would you go to risky assets like stock? It's an easy math to do. A 7% rate, if you'll get on your money, you wouldn't be looking for stocks. And that is the problem. That's why we saw a leg down during the week through James Bullard's comments. And also Fed Collins also did not take 75 off the table. We need to say that a year ago, 75 wasn't even in the cards. Now we're after 475 basis point hikes and it's not off the table. So basically the Fed right now is in love with the 75 basis points. Will they continue? Will they go down to 50 basis points? We will see at the beginning of December, right after the CPI data. And when you look at last Thursday, look how many Fed speakers came out and were very, very hawkish. You saw Bullard, the Philly Fed, Mester, Jefferson, Kansas, we talked about it, and Kashkari, everyone being very, very hawkish. Part of it is to make the stock market be afraid, get investors to be afraid, take money off the table, and reduce inflation. And that is number 3. And between number 1 and number 2, there's a lot of commonality. This is number 2. Number 2 came in Friday, midday. Elizabeth Holmes, the next Steve Jobs, or the next person going to more than 11 years in jail after fraud allegation, not allegation actually, fraud charges of her and Theranos, basically not standing behind her promises, promising something that didn't have the ability. And anyone that doesn't know the story, there are a lot of documentaries around Theranos and everything that Elizabeth Holmes. But on Friday, Elizabeth Holmes got her sentence, which is more than 11 years in jail. Of course, she will try to reduce the sentence and everything. We know that, but it's a huge hit for anyone that is trying to, let's say, sell investors dreams that do not exist. That is number 2. And the clear number 1 for this week is no other than SBF, Sam Bankman-Fried. And if Elizabeth Holmes was the next Steve Jobs, then SBF, the founder of FTX, will he be the next Warren Buffett? Probably not. If you were sitting or lying underneath a rock and you have no idea what I'm talking about, Sam Bankman-Fried was the head of FTX. FTX in the last, you know what, let's go to this slide, which shows our timeline thanks to Bloomberg. November 2nd, early this month, the balance sheet of FTX and Alameda, their hedge fund that did all their trading, was leaked. And it was clear from that point on that allegedly, this was a Fonzie scheme bigger than Madoff, bigger than Enron. We're going to touch upon Enron in just a second. And from that point on, everything new that is being exposed there just makes your hair stand. It's crazy what went there. And you can see, or actually you can read, John J. Ray III, which was the CEO that came in to make sure that Enron, after they were exposed to everything that they have done, the bankruptcy and everything, the fraud actually that they've done, he came into FTX as well. And this is what he said: "Never in my career have I seen such a complete failure of corporate control and such a complete absence of trustworthy financial information as occurred here. It can't get any worse," from the person that saw everything worse at Enron. This is how deep this is. And when you look into their bankruptcy filing, and thanks to Genevieve Roch-Decter, I hope I pronounced the name correctly, there are very, very, very problematic issues on how these companies were run. And the biggest problem is a lot of investment firms invested millions of dollars in the company, to a point where in the last round, Sam Bankman-Fried raised $520 million, which 300 of them he took to his own pocket, basically converting his own shares to cash. And yeah, there are a lot of very, very, very allegedly problematic things that happened in FTX. And that is why Sam Bankman-Fried, the next Warren Buffett question mark, is number 1 on this weekly summary. So let's talk about next week. Next week is a shorter week than usual. we have Thanksgiving Day, which the markets are closed on November 24th. And there's an early close on November 25th. Anyone that is trading options, remember that your time decay works through these days. So think about closing your position. This is not financial advice. Just think about your open trades and open options during these days. What else is happening this week? We have very weak reporting this week. Mainly Zoom and Dell will be interesting Monday after the close. And Tuesday we have Best Buy, Dollar Tree, Dix, and Baidu, and Autodesk, Nordstrom, and HP. Tuesday and Wednesday we have Deere, and everyone is going to eat some turkey during Thanksgiving. So I hope you enjoyed this video. This is the first weekly summary in the new format called Top 10 Weekly Summary. You can, now it would be a good time after you saw this whole video to decide if you want to subscribe. If you want to subscribe, you can click the subscription button below. And of course, if you can click the like button if you enjoyed it, then this video would be exposed to more people across YouTube. Thank you very much, and I'll meet you on the next video on the channel. See you later. Bye-bye.